Hi, Mark Kilroy here from Koste with our second snapshot monthly report for the year. Well, it's been exactly 12 months since I returned back from an overseas trip to the UK and Hong Kong, and we're in a very different place and environment which we're all now living in. Australia does seem to have fared well with the global pandemic, however the property markets have been significantly affected. With more than 3,000 residential reports completed annually by Koste, we're one of Australia's largest tax depreciation providers. We found about a 10% drop in residential reports sales in February comparing previous year pre-COVID. However, we've also seen an increase of about 30% in the same period on commercial report services, which is fantastic. Overall, I do believe the Australian property market is going really well, although not in the typical areas we're used to prior to COVID. Many office workers considered it a necessity to travel up to 2 hours each way, including myself. Often, necessity to work from a CBD location, and many of us had very few options to work from home at the time. Businesses have had to embrace change and implement new technologies and accept that employees will be working from home. It's now reported from the Office of Fair Work Commission that fewer than 5% of office workers sent to work at home during the pandemic actually want to return to a CBD office location on a full-time basis. Many are now looking for the flexibility to work remotely, with many looking to move to regional locations or even interstate, such as Queensland, where I live here. Whilst it's reported house prices have been down in capital cities such as Melbourne and Sydney, regional areas are seeing growth of up to 20% plus. Australia is still closed to the rest of the world and will likely be until at least 2022. Net population growth and emigration has been stagnated. JobKeeper payments and record low interest rates have all kept the property market buoyant to this point. The commercial property market has seen some significant changes this year, and as I previously mentioned, Koste has reported an increase of 30% on commercial report services in February, but this has been mainly due to an increase in hospitality transactions and an increase in demand for medical related properties. The global pandemic has had a major impact on the global economy and especially the commercial real estate market, which has been one of the hardest hit industries. With physical facilities including offices and retail premises closing and reopening with lockdowns, businesses are now looking at getting creative with the way they're operating through digitizing their business, whether it's e-commerce or working from home. Because of this, there's a low demand for lease spaces, and companies are now under pressure to minimize costs in whatever way they can. Depreciation has always been used as a tool to assist businesses with spending. The government support included the instant asset write-off, which many of you may have heard of, which was up to $150,000 for commercial businesses. This finished on the 31st of December, just gone. The good news is the ATO has temporarily raised this limit to an unlimited amount for the most businesses until 30th of June 2022. Koste provides the option to utilise instant asset write-offs in our detailed reports, although you should consult with an accountant or finance team to first check your eligibility first. I'll report back on our updates in a month's time, and I do thank you for listening, and please tune in for our free monthly update next month. Many thanks.